Okay, so we're live now. Hello, everyone. Good evening. If you can't see me or you can hear me, please comment, post a comment, say hi, a fire emoji, or a purple heart. Welcome. Hello. Please, if you are here, please help me by putting a purple heart so that I know that you are here. Hi, Moses. Good evening. Hi. Hello, everyone. Okay, I think we're going to fully get started. Hi, thank you so much, OG. Thank you. Thank you. So, we're going to get started as soon as possible. Or maybe, do you think, Nancy, good evening, first of all. Do you think we should wait till like 7:05 for more people to join? What do you think? Hello, I can't hear you. You're muted.
Hi, sorry. Yeah, I said let's give them a bit of time so that they can join.
Okay, so we're going to get started in the next 3 minutes. So by 7:05, we're going to get started.
Okay, that's good.
Yeah. Okay. So please, if you are here and you know any somebody that can benefit from this webinar, do well to share this to as much as you can. Because of Trader Nancyy, the beauty and brains is going to show you exactly how she trades. So if you don't want to miss this, and also with you getting a chance of getting $50, please do fast to share to anyone that can benefit from this space, from this webinar. Okay, so we're starting the next 2 minutes. Hello, Tommy. Hello, Manhood Success. Hi, Spectrum. I hope you guys are having a lovely weekend. Yeah, and welcome to our last event, but hopefully not the last in the future. Our last Trader Spotlight event with Trader Nancyy. Hi, Ramoni. Hi, Good News. Hi, Onyiechi. Hello. Thank you so much for joining. Hi. Okay, so the next 1 minute we're going to get started. Thank you, Mupel. Thank you. So yeah, 7:05 we're going to get started. Hi. So okay, now it's 7:05. Thank you so much for waiting. And thank you to the guys that are here. Please, as I said before, ensure to share this to everyone. Thank you so much to me. Thank you. So hello, Trader Nancyy. Hello. Hello, Trader Nancyy. Are you there?
Hi, I'm with you, yes.
Okay. So we're getting started now. Hello, everyone, once again, and welcome to our last episode of Trader Spotlight with the amazing, talented, and beautiful Trader Nancyy. Thank you all to everyone that joined our Twitter space, our IG Live, and now for our final event, our webinar. And I really, really hope you benefit from this and enjoy this. And I hope you at least learn a thing or two from this. So, we're going to be talking about cash out strategies when trading AXUUSD, Euro AUD, and Euro USD. So, Trader Nancyy, are you ready to share your insights, your amazing insights with everyone?
Of course I am.
Okay, before we go into the practical aspect of this, because I'm sure that's what most people are waiting for, I have a couple of
Mm-hmm.
questions to ask. So, yeah, so are you ready?
Yep.
Yeah. So, first, let me ask, why do most traders struggle with exiting profitable trades?
Ooh, that's a very interesting question. I'm happy you brought it up. I think one of the major reasons why traders struggle with exiting profitable trade is greed. Yeah,
Yeah.
greed is a major factor. You see, it is one thing to, get a good entry, and another thing to know the good or the right time to exit a trade. We very often want more. You understand? As traders, we want more very often. But then the market is not your personal business. You don't own it. And the market is, if it is generous enough to give you, then you should be, you know, humble enough to take whatever it has given you and leave and then come back another day. It is okay to have a target. Me too. I do trade with targets, yeah. And most times I want to wait for price to reach my target, hit my TP and stuff like that. But then there are certain market conditions that you could see a potential that this is not going to get to your target. You understand? Especially like if you're looking at a very massive distance for price to cover. At the time where price has gotten to maybe your TP1 or TP2, those are areas where you should be looking at securing something instead of just leaving the whole money on the table waiting for that, peak to be reached or stuff like that. So the major factor is greed. And greed, if you do well to eradicate greed, then you could just be getting yourself an inch closer to becoming profitable. So instead of waiting for massive, big profit, you can be taking small profits that will over time compound into something that is massive, especially in the current market condition that we are right now. This is not a time to be looking at massive profits or nothing. This is a time to be taking small profits and, just make sure that you are being on the profit side. So I hope that answers the question.
Yes, it did. It did. Thank you very much for that. Even from the comments, you can see that people really agree with what you're saying. So yes, it did. So now to my next question. According to you said you've been trading for like over 5 years now, right?
Yeah, 7 years or thereabout.
7 years, yeah. So what is your
Mhm.
personal philosophy when it comes to knowing when to leave the market?
My personal philosophy when it comes to knowing when to leave the market.
Yes.
I think for me, normally, yeah, the way I trade, I'm the kind of person that um I'm not very comfortable with taking one-to-one trades, chasing 1:1 ratio kind of trades. I usually go for minimum 1:2, right? Because that is what makes sense. So that, if I take losses versus wins, I'll be able to stay afloat because at least the wins are going to be at least times two of what the losses are. So having that in mind, when I take trades, I'm looking at targeting a minimum of 1:2. If I get a minimum of 1:2, then I'm good. I can exit. But at the same time, I'm also the kind of trader that if I take a trade, the moment that I have taken that trade, I zero my mind on that trade. It's either that trade goes according to my direction or it goes against me. So I don't want to be in a situation whereby I'm trying to, control the outcome of that trade, get out of the trade too soon, or get out of the trade before it's even moved. So I just leave it. Whatever happens, happens. It's if it's gonna go in my direction, it goes, and then I make my money. If it's not gonna go in my direction, it goes against me, and I take the loss, which is fine. And I just come back another day. So yeah.
Yeah, thank you so much for that. And how do you stay emotionally balanced when a trade is deep in profit?
Yeah, that's actually something very, very important because very often traders get into this state of euphoria. Euphoria is cool, like it's a state of happiness. You're happy that you're making profit and stuff like that. But at the same time, it has a negative side. If you dwell in that state of euphoria too much, it could start to make you feel a little bit invisible and, like you have hacked this thing. You don't sabi and finish. You understand? And trust the market to humble you whenever you start to feel too much. When you start to feel too big or too good. Yeah. So it's always better to balance your emotions both when you are in a winning trade and when you are in losing trades. You don't want to be overly excited to the point where you feel like every other setup, what you say is going to happen. Do you understand? And at the same time, you don't want to dwell in a negative um, emotion that holds you back from taking your trades and stuff like that. So yeah, don't be too excited and don't be, you know, too sad or affected by a negative trade, because euphoria, yes, it's a good feeling. You want to feel happy that you made this profit or that profit, but at the same time, there is always a balance for all of these things. Don't be too excited to the point whereby, because sometimes it can even make you to start over trading just because you have hit maybe one or two or three wins back to back to back, like a winning streak. You start to feel invincible, and then you want to keep going and going and going and over trading, thinking that every other one is just going to be like the first two or three trades that were positive and positive. So always keep it, minimal, keep a good balance so that you don't fall into that trap whereby markets will have to come and, slow you down and humble you.
Thank you very much for that. Thank you very much for that. And for the people that just joined, thank you so much for joining. We're talking about cashing out strategies for three currency pairs, which are the XAUUSD, Euro AUD, and Euro USD. So thank you guys for coming. So now we're talking about three currency pairs. So do you approach them differently while trading, and how do you exit them differently if you do, for the three currency pairs we're talking about?
Okay, so all these currency pairs behave differently. The way you would approach Euro USD is not the same way that you would approach XAUUSD because these are two different people. XAUUSD is like very extremely volatile and stuff, and Euro USD is a very calm pair, very suitable for beginners. So the approach is definitely different. For XAUUSD, this is a pair that can make you rich overnight, and at the same time, it can send you to the village overnight as well. Do you understand? So with XAUUSD, you want to be a lot more careful. You want to be a lot more precise and calculated before you go in. But for Euro USD or AED USD, Euro USD is actually the least volatile of the three pairs mentioned here. Euro AED is an exotic pair, and it's also very volatile. But of all of them, XA USD stands out. Euro USD, you can use Euro USD to try to get stronger and find your feet if you're like a beginner and stuff like that. But for the rest of them, Euro AUD, Euro AUD is cool. It's volatile. It can make you a lot of money. At the same time, it can take from you. But XAUSD is not for beginners. XAUSD is a pair that you approach with experience and preparation. So yeah, the approaches for all of them are quite different, but the strategies are the same. The approaches is what is different.
Yeah, so which of these pairs do you find the hardest to manage profit on?
Um, I don't think I really find any of them difficult to manage profit on. Well, I would say XAUSD. XAUSD is a kind of pair that could give you like massive profits in just a small move. So XAUSD is one pair that if you make a 5 minutes move can give you 100 pips. Do you understand?
Mm,
So you can go in and out really quick with that one. So yeah, I think XAUSD would be the one I would say.
okay, okay. And do you prefer partial exits or full closures, and how do you decide which one to use?
Yeah, this was one of the questions during the Instagram handle as well. Sorry,
Yeah,
Instagram live.
like,
Yeah,
yeah.
I do both actually. I do both actually, and like I said during the IG live, taking partials has its pros and its cons. Sometimes I do take partials. Sometimes I like to leave till full target is reached. But then I have to be prepared for whichever of the two. With taking partials, I have to already make up my mind that I'm not getting the full reward that I set out for. Let's say the trade that I'm taking, I'm setting out for a 1 to 2 or a 1 to 3. If I want to take partials, then I'm not going to get that full reward. I'm not going to get the 1 to 2 or the 1 to 3 because I would have cut the position before. So whatever is going to reach the target is not going to be up to the full position that I started with. But then when I want to get the full reward, then I'm not taking partials. I'll just hold it till it reaches the target. I'm the kind of person that have gotten used to just holding my trades till it reaches the target. But then the targets are realistic targets. I don't set unrealistic targets and then wait and then insist that it's the price has to get there. There are differences between realistic targets and unrealistic targets. You understand? These are two like different things. With realistic targets, let's say that I am buying from a structural low, right? Let's say this is a bullish scenario, yeah? I'm buying from a structural low. The next structural high, which should be the one that I will say, okay, price is definitely going to take out. That is a realistic target. That is the first target for me. Do you understand? Now, if there are other ones that are ahead of that one, those ones could be reached. Do you understand? But at the same time, it's not the immediate. It's not the one that is closer or the realistic target. Those ones could be reached quite all right. But then before price reach those ones, price could do a lot. It could take that first one and then decide to come back and play around before shooting again and stuff like that. So taking a profit at the first target usually most of the times will put you in a better position or a better situation than waiting till the farthest target is reached, unless you are a swing trader or position trader who have mastered the act of just set and forget. So yeah, it
Mm,
works differently for everybody anyway.
yes. Thank you very much. Thank you very much for that. Thank you so much.
Yeah.
I'm sorry. Some people are saying, I don't know if you can see me. Can you let me know in the comments? Because I'm seeing some people saying that they are seeing a blank page. So in case anyone can see me, please confirm in the comments so that I can be sure. Okay, okay, thank you, Annie. So we can get started then. So now is the time
Mhm.
you guys have all been waiting for, where the amazing Trader Nancyy is going to show us live and direct how she places trades on those particular currency pairs. So Trader Nancyy, are you ready?
Yeah,
Okay, so
born
I'm just going
ready.
to thank you very much for that. So I'm just going to let you do your thing while I take the backstage. Thank you so much for this. And you people should please pay attention and learn. And if you want to learn more things like this, Trader Nancyy actually has a Telegram channel called Ascending School, right? The Ascending
I
School,
spent
right?
trading school.
The Ascending Trading School. So yeah, thank you very much.
Yeah,
And
there's
Trader
no
Nancyy, let me let you
ing.
do your thing. Ascend Trading School. Okay, Ascend Trading School.
Yes,
Ascend Trading School.
yes,
Okay, no
yes.
problem. So let me let you do your thing. Thank you very much. And yeah.
All right, thank you. So you guys, I hope you all are ready to get in the chats with me. If you're ready to get in the chats, let me see some heart emojis, some purple heart emojis. All right, nice. Okay, so I'll be sharing my screen in a few seconds. What said eyes on the chart make we back test till our eyes bleed. Okay. Um all right, so you guys let me know if you can see my screen. Can you all see my screen? Somebody say, let's go, mommy. Mommy. Okay. Some people are saying yes, some people are saying no. But I do see that my screen is up here. Okay, you can see my screen now. All right, so let's dive right into it. I'm sure most of you have, been wondering what strategy that I trade and stuff like that. And today I'm going to introduce you to it. So the strategy that Trader Nancyy uses is smart money concepts with an in-depth understanding of market structure. So I don't play with market structure. If any of you here, if any of you here have been following me for a while, you should know by now that market structure is, I'm very big on market structure. I'm very big on direction, which means that I always pay attention to market structure. Why is that, if you may ask? You see, trading is, yeah, so in trading, basically, you make money when the market is moving in your direction, right? And you lose money when you go against the direction the price is moving. So it's like if the market is going up, you have to be buying. That is the only grounds for which you make profit. And if the market is going down, you have to be selling. That is the only grounds for which you make market, for which you make profit. So what is the concept? The only concept in technical analysis that teaches you that allows you to be able to understand direction, that teaches you how to read and understand direction. That is market structure. So it makes sense that market structure should be the foundation, it should be the bedrock for any strategy, no matter what strategy that anybody wants to pick up or trade. Even if you want to do smart money concept, or you want to do retail, or you want to do Wyckoff, all these other strategies, market structure should be the foundation for you before any other one comes in. Because you can have an in-depth understanding of these other strategies, smart money concept and all of that. But if you cannot read direction, you still be behind. Like you still be taking losses that you cannot explain. You understand? So market structure is key, and that is why it forms the foundation of my trading strategy. So I always want to understand the structure before I even think of trading any pair, before I think of taking trades on any pair. So let's start with Euro USD. Yes, let's start with Euro USD, because Euro USD, like I said earlier, is a very subtle pair. Price action is clean and clear and all of that. So I trade smart money concepts with an in-depth market structure. Okay, I already have some labels on the chart. That's because I always use these charts to teach. So when I'm looking at taking trades on any pair, as we're starting off with Euro USD, when I'm looking at taking trades on any pair, the first thing that I do, especially if it is a pair that I've not traded in a while, the first thing that I do is I like to go on a higher time frame, which is like starting from the monthly time frame, and try to understand the direction of that particular pair. I will do a top-down analysis starting from the monthly time frame to understand the direction of that pair, and then lower it down, carry that same information down to the lower time frame, where I can then start looking for trading opportunities and points of interest where I could be taking trades from. So starting off with Euro USD, this is the monthly time frame. Yes. So coming on the monthly time frame, first thing I'm looking at is what is the direction. If you can see my screen now, oh god, I already have it labeled. Let me take out these. You guys have already given you a response. I want to ask you a question because I want this to be an interactive class. Yes. So looking at the monthly time frame here on Euro USD, what is the direction that you see? Is it bullish or bearish? I want to see your answers in the comments. Is it bullish? Are you seeing a bullish structure here, or you're seeing a bearish structure? Drop your comments. Drop your answers in the comments. Okay, I'm seeing a lot of bullish structure, bullish structure. Somebody said bearish, more bullish structure, bearish, bearish, bullish. All right, all right, all right. So we're going to look at it together as well. So I think there are more people that said bullish structure than there are that said bearish structure. So let's see which one it is, right? Right? Let's see which one it is. Let's see if it is bullish or bearish. So first of all, how do you know the structure? What is the characteristics of a bullish structure? A bullish structure in the markets, we want to see that price is making series of higher highs and higher lows, right? This is what characterizes a bullish structure. When price is making series of higher highs and higher lows, then we can define that structure is bullish, right? And then for a bearish structure, we want to see the reverse of that, which is price making lower highs and what? Lower lows. That is what signifies a bearish structure. So if we look at what we have on here, are we making higher highs and higher lows, or are we making lower highs and lower lows? This question goes for everybody. And for those that identify the bearish structure, looking at this again for the second time, are we making higher highs and higher lows, or are we making lower highs and lower lows? Somebody said lower highs and all. Lower highs and lower lows? Really? That's very interesting. Yeah, more people say higher highs and higher lows. Somebody say lower highs and lower lows. Okay. Okay. Forex update said because we took the liquidity low. We're not yet into liquidity anyway. We're just trying to understand the structure. Higher highs and higher lows. Okay, that's cool. That's interesting. So let's take a look at it. Remember that this is a monthly time frame, right? So monthly time frame, what we are looking at here is the institutional footprint. Monthly time frame is what somebody said consolidation. Monthly time frame is what helps you to see the institutional footprint, the institutional direction, right? Before we go down to the lower time frame and all of that. So we're not looking at what is on the right hand side yet. We're starting off from what is on the left. We're going to read price from the left and then all the way to the right, right? Because the left hand side is going to help us to even make sense of what is happening at the right hand side. Okay. So from the left, we have what? This is where it all began, right? This is where it began, 1971. That is when Euro USD became a tradable currency pair, right? So it started off from here. We created a low, which made its way up to this point and created a high. And then what did price do right after that? Price made a retracement. And what did the retracement do? The retracement came and reacted from that low where the whole movement started and then picked up from there to push back up and then take out the previous high, creating a new high which was higher than the previous high. So technically, this is a low, this is a high, this is a higher low. It is a higher low because it did not take out the previous low. It is obviously higher than the previous low. And then we have what? A higher high. And then right after that, what did price do? Price made another retracement, which came and created another higher low. And then after that, what did we do again? We made a push back up to take out the previous high, creating what? A higher high. So this is clearly indicative of a bullish structure. Are you guys clear now? The people that identify the bearish structure, have you seen it now? Can you clearly identify a bullish structure now? So this is a higher high. And then what did we do? We made another retracement, came back into the previous low, reacted from it, and then we created what? A higher low right now. So having created a higher low, what is our expectation? That we will now go back up to take out the previous high and create a higher high. That is if and only if the bullish structure is still to be maintained, right? But if the bullish structure is not to be maintained anymore, if they want to change direction, that is the only grounds for where we would expect them to come and take out this previous low. And then what will happen then? They will now create a lower low instead of a higher low. And then that will change the narrative from bullish to bearish. Okay? So have you guys seen it clearly now? Those that were identifying a bearish structure, can you see how this is actually a bullish structure? Absolutely. To me said bearish. Okay, okay. I mean, we all see things differently, so it's cool. I mean, you could be seeing a bearish structure, but that's fine as well. That's fine. That's fine. All right. So when I have read the structure from the higher time frame, which is the monthly time frame in this instance, the next thing that I like to do is to go down to the lower time frames to understand what the lower time frame direction is as well, because higher time frame direction is not always the same as lower time frame direction, right? Higher time frame, obviously here we have a bullish structure, but on the lower time frame there is a high chance that you go down to the lower time frame. You can go down to the lower time frame and then see that lower time frame is bearish. That is because higher time frame retracement can be a whole full-blown structure of its own on the lower time frame. So let's go down to the lower time frame, right? Let's go down to the weekly. Of course, now we already understood that on the monthly we are bullish, and on the monthly we have made a bearish retracement back down into the last low that price used to create the last impulse to the upside. And clearly, that is somewhere that we want to be looking for buying opportunity. And then price reached into that area, and then we had a reaction that is pushing price back up now. But then, does it mean that this bearish retracement is over? No, not yet. Why do we say that the bearish retracement is not over yet? Remember that when you are reading structure, you are not just reading structure for the pro trend. You also read structure for the counter trend. Reason is because you need to also know the counter trend structure so that when the counter trend is over, that is retracement. When I say counter trend, I'm also making reference to retracement, right? So you want to know when the retracement is over so that you change your bias and then switch to the overall trend. Okay. So the bearish retracement, of course, picked up from here, right? Price dropped and then started creating lower highs and lower lows. Maybe this is what Tumi is seeing, right? So the bearish retracement picked up from here, dropped to this point, went back up, picked up from here again for the second time, dropped to this point, took out the previous low, went back up, picked up from here, and then dropped to this point, right? Took out the previous low, went back up, picked up from here, and then dropped to this point, taking out the previous low. So what does that mean? That means that this bearish retracement, its own structure is this high to this low, lower high, lower low, lower high, lower low, lower high, and a lower low. So for this bearish retracement to be over, for us to know that this bearish retracement is over, we want to see that price takes out this high. So even though as of the moment we are reacting from that monthly structural low, which has the potential to sponsor a bullish continuation if the bullish direction is still to be maintained, we still want to keep it at the back of our mind that the bearish retracement is still intact because price is yet to take out the high that formed the last bearish impulse that broke structure to the downside. So at any point, at the point whereby price takes out that high, that is when we can now confirm that the bullish structure is resuming, right? So when price takes out the high, that will give us a break of structure to the upside, and then we can now confirm that the bullish structure is still intact and is resuming. So when that happens, we'll now be expecting that even if price makes another bearish push to the downside, we will now be coming to react and then continue the bullish direction. So we'll be coming to react to this guy. Why? Because this guy have already caused a break of structure to the upside, which means price will no longer be coming to take it out. Rather, price will be coming to react from there to go and give us another push to the upside. When that happens, then we know that the bullish um, direction have been solidified, and then we can be looking for more buys and more buys and more buys. Now let's take this down to the lower time frame. Yes, let's take the whole information that we've gotten now to the lower time frame to see what the lower time frame direction is as well, so that we can better understand how to trade Euro USD. Now, if I go to the weekly time frame, what you're going to see on the weekly time frame is this price action right here, which we have already clearly seen on the monthly. So sometimes I like to skip the weekly time frame, because the weekly time frame can be seen the weekly direction can be seen on the monthly direction when I'm doing top down analysis. But however, let's just look at it. So the weekly, like I said, that monthly time frame bearish retracement is what you see here, and you can see that weekly, you can see that high that made the final bearish impulse to the downside. So this is it. This is the high that made the final push to the downside, took out this other low, giving us a break of structure to the downside, right? So you can clearly see that the bearish structure is still intact, because we still have this high to this low. Now, somebody paying attention to this would want to ask me, why are you saying this high? Why not this one? Have any of you wondered why I am saying this one and not this one? I want to see your comments. Have anybody wondered why I keep on identifying this high instead of this one? Why didn't I say this high to this low and then this high to this low? Why am I saying this one instead of this one? Okay. Okay. Thank you, Emmanuel. Emmanuel Ejueyi something Ejueyiche. Yeah, that's a very correct answer. I said because he did not take out the previous low. Yes, that's a valid high bid orders to mere inducement because it didn't break structure. Absolutely, because it's the one that created the previous low that is supposed to be broken. Okay, because one did not break structure. Thank you. So that is another thing that you should keep at the back of your mind. Okay, if you did not take anything away from this session today, then let this be what you're going to take out of this session today. So the reason why I am taking this and not this is because this is the originator of the move. This is the guy that originated the move, right? Remember that as of the time of originating the move, as of the time of picking up this sell from here, the aim was to come and take out this low, right? The aim was to come and take out this low. But then the sell started coming down and got to this point. At this point, this low was still intact. They have not yet taken it out. But then they made a retracement back up, right? This retracement back up is an inducement. It is an inducement. And then right after making that retracement back up, they then came and reacted here and then continued to complete the move by coming down further to take out this low. Okay, so this high started the move, but then got to this point, made a retracement without taking the low, and then created this new high, and then finally made the complete move to take out the low. So this is still the originator of the move, not this guy. Because we could have a situation whereby price decides to make a bullish retracement and then goes to take out this high, and after taking out this high, still makes a reversal to take out this low. And then if that happens, somebody might now start to wonder, but this high was taken now. Is that not a break of structure? No, it's not. That's because this is not the high that originated the move that broke structure to the downside. This is the high that did it. And then taking this one while reacting to this one shows that they actually respected the last structural high and then made the move to take out the low. Okay, so when you're reading structure, always account for the origin, not the internal structures. This one is an internal structure. The origin is what matters. Thank you. Who is that person? Forex update. Yes, it is a weak high. It is a weak high. Okay, so this is the origin. This is the one that matters. This is the one that they would respect, and then they could take this one. And when they take this one, that would be a liquidity. They would take it as liquidity to continue the move. But at the same time, we could also have situations whereby they come and they respect this one and continue the move at the same time. That is why the market is dynamic. Okay, so whenever you're analyzing the markets, you always want to account for every possible scenarios. That's something that I always tell people. Don't be the kind of trader that once you have said that this is your what is it called, this is what you are looking at, or this is what your expectations are, you sit on it. There is no, you're not making any adjustments. Nothing will happen where this thing no go like this. It's not, that's not how you trade the market. You always want to be flexible and fluid, because the market is dynamic, and the market could create like multiple scenarios, and if you're not putting all of them into consideration, one might happen and then another might not happen. But then you now, because you did not expect that one that happened, you now think the market is behaving weird, or it's not behaving according to the way you wanted it to. That's because you did not account for every possible scenario. So you always want to put every single scenario into consideration, because this could happen and that could also happen at the same time. So having seen this now, let's go to the daily time frame to look at the daily structure. Remember that we have seen that monthly is bullish, and also that monthly have delivered price back into a structural low, which has the potential to sponsor a bullish continuation based off of the overall direction on the monthly time frame. And then we came down to the weekly to see that the bearish retracement is still intact based off of the weekly structure, right? It's still intact because price is yet to take out the high that sponsored the last impulse to the downside. Okay, so Euro USD monthly time frame bullish, weekly time frame bearish. Now let's go to the daily time frame to look at what the direction is on the daily time frame. All right, so this is the daily time frame, right? Now on the daily time frame, we want to see what the daily direction have been so far to know where price is headed or what price is doing. Forex updates. I don't really understand your question. You said you use support and resistance. What am I going to do? Please make me understand. I can't really. I don't really understand what the question is. All right. So daily time frame. Let's pick up from here, right? Let's pick up from here. Remember, I told you guys I always want to account for every single possible scenario. Let's pick up from here. So remember that weekly was bearish, right? Weekly was making a bearish retracement, and then that bearish retracement drove price into a monthly structural low, which is a POI. And as of the time of making the bearish retracements, of course, they were creating structure, right? You could see a clear bearish structure here. This high, taking out this low, making a retracement. Even though this retracement did not reach into premium, right? But sometimes you could have situations whereby price does things like this and then starts creating internal structures and start working with it. So we had this high, now make another impulse to the downside, took out this low, and then we made a retracement, creating this high, and then this high sponsored another sell, took out this low, right? So these are the structures inside of this area. And then when this final drop happened, price tapped into that monthly point of interest, that structural low, and then we had a reaction from there. We had a push that came back up. Of course, when this push happened, we expect that they would respect this high, right? That is, if they wanted to continue bearish, they would react to this high and then make another impulse. They reacted, but then they did not take out the previous low, right? Which makes this a weak high. So when they did not take out the previous low and then rather came back up, they took out this high. And then they reacted again, came back down, but then still did not take out the low, which also makes this a weak high. And then they came back up and took this high and then took this one. Now, upon taking this one, this was where we had a break of structure to the upside here on the daily time frame. So for anybody who had been selling all the way from here, when this happened, this was the first sign to switch bias from bearish to bullish. So now you're looking for buying opportunities. But then looking for buying opportunities, mostly we would prefer to see price make a proper retracement, right? At least into discount price of the structure before we look for buying opportunities to continue. But in this instance, price did not make that retracement. Price did not come back into discount of the structural leg that broke structure. Instead, they started making tiny, moves, tiny structures, and then they just kept pushing and pushing and pushing and going up and going up, right? Until they came to this point whereby they started creating internal structures and using it to continue the bullish impulse. At this point, right, they created this low. After they used this low to grab liquidity on the left, and then they made an impulse to the upside to create this high. And then what did this high do? It took out the previous high. So that is a higher high, clearly. It took out the previous high. So that is why when price made a retracement back in there, you see that we came and respected that low, right? Now, if you're wondering, did we really respect that low? Let's look at it. Let's use a line tool to see if that low was respected or taken out. So this is it. You can see that they did not take it out. So they clearly respected that low. And then from there, what happened? They respected that low, and then they picked up from there to create a new high. I hope all of you are following, right? They respected that low, went to create a new high. They took out this previous high and then created a higher high, right? And then after that, what did they do again? They retraced back again, came to respect this low. And then they did what again? They went back up to take the previous high. So this is clearly a bullish arrangement, right? Creating a new high. This is clearly a bullish arrangement. And then right after doing that, what did they do? They came back down. But this time around, instead of respecting this low and going to create a new high, they did something different. This time around, they took this low. They took out this low. And also even took out this one. So when that happened, that is a bearish behavior, right? That is clearly a bearish behavior. Taking out the low that sponsored the last impulse to the upside is clearly a bearish behavior. So if you were trading EURUSD as of that time of this happening, you know that the best thing to do is to change your bias from bullish to bearish, because this is a break of structure to the downside. So you start looking for selling opportunities, because clearly if they come back up, they are not going to take out this high, because this high have sponsored a break of structure to the downside. They will be coming back to respect it and then go lower. So let's see what happened right after they broke structure to the downside. Now, after they broke structure to the downside, they came back up, right? They came back up here, reacted to this high, and started making their way down. They started making their way down, but then this sell from here, of course, the expectation is for it to come and take out this low, give us a break of structure to the downside. But then it did not do that. And that is exactly why price came back up. When price started coming back up, this high was a weak high. And that is why price took it out. And then price took it out while still respecting the structural high that broke structure to the downside. And then what did they do from there? They picked up another sell. Since they have taken this guy, that was a bearish behavior. Remember, that was a bearish behavior. So you would switch your bias from bullish to bearish, looking for selling opportunity, right? So they picked up a sell from there, and then what did they do? They finally came and took out this low, right? they took out this low. Now, upon taking out this low, we could see a bearish arrangement. At the time, this high becomes a structural high, and then this low became a structural low. So when the buys from here kicked in, price pushed into this high, we would now be looking at a sell opportunity from this high if and only if we see a break of structure when price reached this high. And the reason is because this high had the potential to do that. This high had the potential to sponsor a sell to the downside. But then let me show you guys what actually happened. Why did we reach after price came, took out this low and did all of that, and then it started trading back up? Why didn't we respect this high to maintain a bearish structure? Why did we take out this high? Now let me show you guys. Let me take you back to where we started. Remember that when we started off from here, right? I told you guys that price did what? Price broke structure. I told you guys that price broke structure here, right? Price broke structure here. And normally, our expectation after price broke structure would be for price to make a proper retracement into discount of the range that broke structure before we make a bullish continuation. But price did not do that. Do you remember that? Price did not make that proper retracement into discounts in order to continue the move. Instead, they started to make these tiny internal structures and then started building bullish structures and just kept going. So this sell was actually them making that proper retracement, but then they did it after months of creating these bullish internal structures. So anyone who would have thought that this price action here was, out of the ordinary is probably somebody who did not notice the price action inside of this area. So they did what? They broke structure. They kept on going with creating tiny internal structures instead of making a proper retracement into the range that broke structure in order to continue the bullish delivery. They kept on creating internal structures, tiny internal structures, and using it to continue the move. But then they did not forget this place. They did not forget that they needed to do this, which is why even after months of going around in circles, they came back to deliver properly into discount of that area. And then when they did that, what did they achieve? They took out all of those tiny internal structures that were created. Everything was wiped out as liquidity, as internal liquidity. And then after they took it out, they used it to make a bullish continuation. And you can see how massive the bullishness was, right? You can see how massive the delivery was. That is because they properly grabbed liquidity, and then they made a massive impulse to the upside and then took this high. So upon taking this high, we can clearly see that we are bullish on this time frame. There is no two ways about it anymore. We are clearly bullish. So even if we make another sell from here, start coming down and all of that, we are looking at a sell to buy, not a sell to come and take out this low, because this low have established itself. It has broken structure to the upside when it took this high. Are you guys following? If you're following, let me see some purple hearts. Somebody said Forex update, stop that World Cup now. Let me see some purple hearts if you're following. Are you following so far? They enter, Bino, they enter. All right. Somebody say, what is the relevance of support and resistance in the SMC strategy since we take trades from other blocks? There is huge relevance, you see. When we started, normally everybody, all of us, we started from learning support and resistance, retail method and all of that before you switch to learning SMC. Now, let me ask you a question, yes? If you did not understand what support and resistance is, what they represent, do you think you would have been able to make sense of liquidity? It's a question. Oh. It's a question. Manuel, which one is demonstration tool? I don't know what demonstration tool. Do they have demonstration tools here? Because I'm just using my cursor to do this. Thank you, Kerika Santa. You got it. So there's no knowledge that is a waste. Like there's no knowledge that is a waste. Even if you're trading SMC today, the reason why you understand SMC is because you previously understood what is it called? Retail method. Because retail method teaches you support and resistance. They tell you when price have hit this area of support or resistance 2-3 times, they talk about the triple touch confirmation. If price hits it 3 times, it shows that it's a strong resistance or a strong support zone. So you should be looking to buy or you should be looking to sell from those zones. And then when you buy or sell from those zones, you place your stop loss above or below those zones. That is what retail teaches you, right? But then when you come to SMC, SMC turns it around. SMC is like the flip side of retail method. SMC now tells you that those your strong zones of where price have hit and reacted 3-4 times are not support and resistance. Yes, they are resistance, they are called resistance zones, but those resistance zones are areas of liquidity. The fact that price is hitting it multiple times and rejecting it is they are doing that with the intention of building liquidity in that place. They are building liquidity because they know that they taught you to buy and sell from those areas, and they know that if you're buying and selling from those areas, you're placing stop losses at the high, above the highs or below the lows. And what is a stop loss? What is a stop loss? Apart from what our understanding of what a stop loss is, what is a stop loss? Stop loss is money. Am I right or wrong? Stop loss is money. Those stop losses that you placed is technically more, because if price hits your stop loss, it is money that you're losing. So your stop loss is liquidity. You are building liquidity at those areas. So when they come, they have something to get to make from, like they have a massive pool of liquidity waiting for them to grab, and then everybody will be taken out. So there's no knowledge that is a waste. Your support and resistance from your retail method is the reason why you better understand smart money concept, because now you can easily flip it, know that support and resistance are areas of liquidity. But then imagine that you did not learn retail method and then you jump straight to learn SMC. Then they start telling you resistance and support zones are areas of liquidity. You'll be like, what is support? What is resistance? Like, it is always better to start, especially for beginners here. It is always better to start from, from the basics. That is why my beginner course, in as much as I don't trade retail method, I taught them retail method there. That is because that knowledge of retail method is what's going to help them to understand the next advanced concept, which is smart money concept. Because if they don't understand it, if I'm telling them equal highs, they'll be like, what is equal highs? But retail method, they can see what equal highs are. They are looking at it like M pattern and W pattern, all those things, head and shoulder, all those things. Oh, when you say equal highs, they know what equal highs are. You understand? And equal highs in the retail method is where you're supposed to sell. But equal highs in the smart money concept is where you're supposed to stay away from, because you know that those equal highs are liquidity, which price could potentially go and take out before they continue to make the move. So always cherish everything that you know. Even if now you no longer use it, it seems outdated and stuff. It is what helped you to understand the strategy that you're currently using, okay? Somebody said support and resistance, you use it to take loss and stop profit. You guys are so funny. So yeah. All right. Let's go back to what we are discussing. This person, I don't know what tool that you're saying I should use and how I'm supposed to use it, but I'm currently using my cursor, so I don't know, maybe it's not efficient, but I'm not very much familiar with this platform. Yes, no knowledge is a waste. So as I was saying, so what they clearly have done now is solidify the bullish structure, solidify their bullish direction. So if they come back down, we know that they are coming back down to pick up and continue the bullish direction and not to take out this low because this low has broken structure to the upside. So Euro USD on the daily time frame is bullish. Okay. So we have identified the direction on the monthly, which is bullish, weekly, bearish, and then daily bullish. The cursor bar is a demonstration tool. My dear, I honestly, I honestly don't know what else to do. So you just have to bear with me with the one that I know how to use, which I'm using. Yes. So weekly bearish, monthly bullish, weekly bearish, and then daily bullish. Now let's go down to the 4 hour and understand what price did there. Now, before we go to the 4 hour, remember I told you guys that this high had the potential to sponsor a bearish continuation. Had it been that was the narrative, had it been that was what they intended, right? And the only way for us to confirm that that was what they intended is if they had taken out this low right after reacting to this high, right after this reaction. If they had taken out this low, that would have given us a sign that they wanted to go to the upside. And I remember at the time of the price action here, I posted the updates in my Telegram channel. By the way, if you're not in my Telegram channel, what are you doing? You should definitely be there. I posted an update in my Telegram channel telling them that what price does here is what's going to determine if this high is going to hold as a structural high as of that time, or if it's going to be taken out. And if we see price trade below this guy, then that would give us that information, right? Because that would be a break of structure to the upside, and then we can now expect them to make a push to the downside. But then clearly they did not do that. Instead, they came and they reacted to it. They came and reacted to it and then made a final push to take out this high. That's another thing that you have to always pay attention to. I remember somebody once asked me what I look out for before I take trades or how I approach the market, and I told the person that I made it as a content. Is in my page actually. If you go to one of those contents I made, you can see it where I answered the question because when I'm looking at taking trades in the market, there are 4 questions that are like a guiding principle for me, right? And these 4 questions help me to identify direction and points of interest and know when to take a trade and stuff like that. And the first of the 4 questions is number one, what is direction? Right? What is direction? When I'm looking at any pair that I'm trading, whether I'm taking it for the first time or I'm have traded it before, I always want to know what the direction is, right? Is it bullish? Is it bearish? Are we bullish or are we bearish? And to know what the direction is, I want to go down to the monthly time frame. That is if it is a pair that I've not traded in a while, right? But if it is a pair that I have been trading for a while, I don't need to be going to the monthly time frame all the time. Like Euro USD, me going to the monthly time frame on Euro USD is probably if I'm having a session or I'm teaching somebody, not because I want to go and check what the direction is, because I already know what the direction is on the monthly time frame, which is bullish, right? So that's the first question. What is the direction? Now, after I've identified what the direction is, the second question, the link to my Telegram channel is on my Instagram page. When you click my Instagram page, go to the links, you see the link to my Telegram channel there. Now, the second question is after I've identified the direction, the second question is where is price? Okay. Where is price helps me to know whether price is at premium, price is at discount, depending on what the direction is. Is price at premium, is price at a discount, or is price at a point of interest? Right? So when I identify that, the third question will now be what is price doing there? So let's now take this for instance. Yeah, after we made this drop, and then I was looking at trading this pair at the time, right? And I'm asking myself what the direction is. Clearly, I understood at the time that we were bearish, and at the same time we were bullish, right? And we were bearish so that price can come and deliver into a discount of the bullish impulse leg that they did not do all along, right? And then as of the time of them completing that, fulfilling that, the next thing I want to know is where price is, I could see that price is at discount because they have taken all of these inside and they have delivered into discount of that impulse leg. I could see that at that time that price was at discount. Now the third question is, what is price doing there? What is price doing there is what is going to help me to know whether I should be looking at the buying a taking trade on that pair, whether it's a buying or a selling opportunity, right? So what is price doing there? As of the time, I could clearly see that, okay, we reached into that area and then we had a clear bearish structure coming in there, right? We had a clear bearish structure coming into that place. So I want to see, how price is following through on that direction and when or where we break that bearish structure. So let me take you down. Let me take you guys down to the 4-hour time frame so that it will be clearer. It will be easier to see. On the 4-hour time frame, yes. So coming into that area, I could see that we had a clear bearish structure. We had a clear bearish structure. We had this high, after price grabbed liquidity to the left, we had this high come down to take out this low, and then we started forming more lower highs and then lower lows. This was the final drop, right? So if I had met price here at the time, by the way, this particular price action, we followed it up at the time. That was that was in January, February when I was having my mentorship program with some of the guys that signed up for it. So we followed up all of this price action, all of these trades. We took most of them. So at the time, I could see that this high made the last drop to the downside, and then as price approached this high, I want to see what they do there. Are they going to react to it to continue going down? Are they going to take it out? If they take it out, that is my first sign that we are shifting to the upside, right? And then we clearly see that they made the push, but then they took out this high, right? So that answers my third question. What is price doing there? I can clearly see that what price did was take out the high that sponsored the last impulse to the downside. And that is what? That is a bullish behavior. That is a bullish behavior. That is a shift to the upside. That is my first sign. So I can now switch my bias. If I were looking at a sell previously, I'll now start looking for a buy. And that is clearly how this happened. They came down after taking the high, they came down and did what? Reacted to this low. You see how they did not now take this low? Why didn't they do that? Because this low is now a strong low. This low have sponsored a break of structure to the upside. That is why they came back down, even though price gapped down. Because this was a weekend. This was during a weekend, and then when the market opened, they gapped down. Regardless of the gap, they did not gap. Gapping down is like price moving like in such a way that it's not controlled. Do you get? It's like price action that happened over the weekend, and then market opens, and then it goes boom. Even though they gapped down, they did not gap and take out this low. They still respected themselves. The gap did not take out this low. The gap came and reacted to that low because this low had already broken structure to the upside, which installs it as a strong low. So they gapped down and then respected this low and picked up for a bullish continuation. Now, as they started making that bullish continuation, this is where support and resistance comes in, right? What did your support and resistance teach you? Strong zones, right? If price have reacted to a particular area the first time, the second time, and then the third time, when price comes back there, what should you do? Sell. You should what? Sell. And when you sell, what should you do? Place your stop loss above that zone, because that zone is a strong pillar. It is a resistance zone. What does the term resistance mean? To resist means like I no agree, you no go pass. That is what resistance stands for. So this zone was supposed to resist. It was supposed to hold price down, say no, you're not going anywhere. And that is what your retail method teaches you. But then because you understood that and then got to learn about smart money concepts and then understood that, oh, instead of resisting and resisting, this area is actually building liquidity because everybody is selling there, and you don't want to move with the majority, right? What that place has clearly become is a pool of liquidity. Exactly, third touch does the trick. But that place have become a pool of liquidity, which means that when they come there, yes, they are going to make you there. See, there's no strategy that doesn't work, and there's no pattern that the market cannot create for you. Even if you're trading crocodile pattern, market will create crocodile pattern for you just to convince you that yes, you are doing the right thing. And then after you have settled in with your crocodile pattern, they will now do what is in their mind. So you see that they already have created a bullish structure after taking out this high. But then for somebody who do not understand this, for somebody who is just trading their support and resistance jejely, they will come back here and then they start selling. But then markets have already changed direction to bullish. And that's exactly why you see after they came there, they reacted. They reacted here. And this reacting, what is it called? It's an inducement. What is inducement? What is an inducement? To induce something is to cause something to happen, something that you wouldn't do naturally. If they say somebody induced you to sleep, it means that person maybe probably gave you a drug or whatever so that you will sleep, right? So an inducement is like to trick somebody or something into happening. So this was an inducement. They came up here, they induced everybody to take cells, to think that yes, it is a bearish scenario. This is a bearish setup. And then after they took the cells, what happened? They came and picked up and ran with it. You see the momentum with which they cleared everything. They did not even give them a chance to run away. They did not even give them a chance to chicken out. They ran everybody. Everybody that was selling from here definitely went to their village. I'm just kidding. So do you understand it now? So this has answered my third question. What is price doing there? So what is price doing there? I've seen that price has broken structure. And then when they did come back down, that was my opportunity to take a buy. And then I took my buy. After I took my buy, the final question, which is the fourth question, is where is price headed? Where is price headed is what is going to help me to determine my target. Because when you are trading, of course, you always want to have a target, right? You can have your first target and then other targets. So where is price headed? As of the time of taking the buy from here, I could clearly see that we have this build-up of liquidity here. So that was my first target. So the answer to my fourth question, where is price headed, is clearly to take out this high. To take out this high. That is the first realistic target. Because why is it this high? Because now we are reacting to this low and price has shifted structure to the upside. So if a bullish structure is to be maintained, this high will have to be taken out to create a higher high. Right? So that's my target, to take out this high. And then when they came up and started reacting from here, this is the part where so many people will start to doubt themselves and doubt their strategy and then try to leave the trade and try to control the outcome of the trade. That is why, in addition to building an edge, in addition to like learning a strategy, understanding a strategy and all of that, you also want to understand your mindset, like yourself. Like you have to also build a strong mindset. You have to build a strong mindset because in many cases you could be right with your analysis, but then the market will not always do the delivery the exact same way that you would prefer them to do it. The market, yes, is moving in your direction, quite all right. But then before they do it, they could play around and do a whole lot of things that will make you lose hope and decide to even leave the trade too early just because you can't handle that erratic movement or how price is playing around and all of that. So your psychology, that is why they tell you that trading is 90% psychology and 10% technical, because at the end of the day, what determines whether you're going to become profitable is your psychology. Your psychology is your ability to take a trade and zero your mind in it. Your psychology is what determines whether you are going to make money from this trade, not your technical expertise, not your strategy. Your strategy gives you an edge. That is beautiful. But then whether you're going to take a trade based off of that edge and also see through to the end is your mind. Because imagine somebody who had taken these buyers of the time that this was happening. For me, I knew that this was the target. In fact, when they started doing all of this, it gave me more confidence in this trade. Like it made me, it's, do you know what? It's like they solidified something, solidifying your confidence, because I knew that there is no way in hell that all of this will be allowed to sit while they go back down and start trading. No, no, no. That, I mean, it was just too, it looked too good to be ignored. Do you understand? So as of the time they came and started reacting, they came reacted instead of thinking of going. You can see that I had like several positions here. I had a position here. I had an additional position here. Price came, took this one. Even though they took this one, it did not make me think that this buy is not happening again, because I knew that if they took this one, it is okay for them to take this one while they still come and react to this. All of these things are because I understood market structure. The way I read structure is probably different from the way most people do it. That's because I have an in-depth understanding of structure. And as of the time that this was happening, that was when I was having the mentorship. So the people that were with me at the time were seeing all of these, were following all of these up, and we saw these trades, we took these trades, and we made money from it. So even though they came and they started selling and doing all of this, it was not a reason to start thinking, oh my God, this trade might not go again, or it might not buy again, or it might not. Nah. That's because I understood my onions. I had a TikTok. I know my onions. So when it came, this was an opportunity to scale in more entry, to finally go and do the needful. So in addition to, in all your gettings, get a strong mind, get a strong psychology, because the money that you need is in this market. But then what is holding you back is your mindset. The money that you need is in this market. But what is holding you back is your mindset. You need to develop a strong mindset. The moment you have entered the trade, now only two things will happen. Past two. Only two things. It's either that trade goes your way, or it goes against you. If it goes against you, by the time you were opening the trade, you should have allocated a certain amount of money. That is the risk. That is how much you're risking, that you're putting on the table. That is how much you're betting on the trade, to see whether it goes according to your analysis or against your analysis. So by the time you have placed that bet, come on your mind, like just leave it. Let whatever is going to happen happen. Let the market do the rest. Because honestly, you do not have any more control. But then very often we find ourselves trying to control the trade, trying to control the outcome, when you should have just leave it be and just relax. Trade will go give you money, go give you money. Trade will go hit stop loss, go hit stop loss. It is not for you to determine. Are you guys with me? Exactly. TP or SL, nothing more, nothing less. Nothing more, nothing less. So we've answered the final question, right? We've answered the final question, which is the where is price headed. So where is price headed helps me to see where my target is going to be. And as of the time of this price action, I knew that price was going to take these out. And that was the target. And what did they do? They did take it out. They did take it out. So here on the daily, we have seen, okay, we're down to 4 hours, yes. So after they took it out, they kept on going, kept on pushing, and then reached into that daily high and made this reaction from there. And then I told them that this reaction that we have made from here, it is either we take this low and then shift structure to the downside and continue selling, or we react and then push higher and continue buying, depending on what they want to do. If they want a bearish price action, if this high was supposed to hold, if it was supposed to sponsor a bearish continuation, then they are going to break structure and go lower. But if it was not, then they are going to react to this low and go higher. And clearly they reacted and went higher to take out this. And that solidified the direction, which is now bullish. on EURUSD. Hope you guys have followed up so far. I don't know how long this session is supposed to last. Give me a second. All right. I'm seeing all the comments. So this is I'm just giving you guys an overview of how I trade. I've given you guys an overview of my trading strategy. This is basic, it's not complicated. Somebody said, why didn't market come down? Okay, you know what? Yeah, so I've given you guys an overview of my strategy. It's not complicated. It's just a combination of smart money concepts with an in-depth understanding of market structure and all these other things: liquidity variance, what is it called, order blocks, fair value gaps. All of these things are incorporated in my trading strategy, and that is how I'm able to navigate all these different pairs, whether it is euro USD, GBP USD, which some of you should know that these are the pairs I mostly trade, gold or euro AED, any pair at all. This strategy works across board. So you just have to understand the market. You have to first of all understand direction and know that based on who you be, which is a mere retail trader, you need to have an in-depth understanding of structure, because that is what is going to be saving you. Because you cannot come and be trading in opposite direction with smart money. That is the market makers. They cannot be going right and you'll be going left. You'll be getting hit unnecessarily. Like you'll be taking. There's one illustration I usually make here where I tell people that imagine you're driving in a single lane, right? A one way lane or whatever, and you are driving a keke, and then there's a truck, like a massive truck, a trailer coming. And then instead of moving in the direction that the one-way lane is moving, instead of going in the direction and moving with everybody, you can't go the move opposite of the trailer. And you're driving a keke. What's going to happen? You're going to collide with that trailer. And when you collide, who is going to take the hit? I want to see in the comments. Who go suffer am? Is it the trailer or you that is driving keke? Is it the trailer or is it you that is driving keke? Who is going to take the hit? Exactly. The keke will be damaged. That keke will never see the light of day again. So that's basically you. That is you. You are the keke, and the market maker is the trailer. So the only grounds for which you survive is if you are moving in the same direction with them. If they go front, follow them. They go front. They say follow who no road. Now them no road. You don't know anything. You're supposed to be following them. And the only thing that allows you to follow them and follow them well is an understanding of market structure. That is direction. So that if they are going the upward direction, you self, you go put yourself in that direction and go the upward direction. If they're going the downward direction, you put yourself there and go in the downward direction. So that is why it is not just smart money concept for me. It is also an in-depth understanding of market structure, and I apply it across every pair that I trade. Okay, so this is time for you guys to ask questions if you have questions. Because we have exceeded the 1 hour time limit for this session. Somebody say now you be the keke. You too, you are keke. Abi, you be market maker. You're a retail trader like me now. Even if now $100,000 you dey trade or even $1 million you dey trade, you are still a retail trader because you don't have what it takes to be a market maker. Your account size no fit move market one pip. Hope you know. Hope you know that. You cannot move the market one pip. Exactly, keke will feel the aura of the trade. This one is not the one they say aura for aura. This is aura for only the keke. Serious aura. Yeah, I really appreciate you guys as well. You guys are so funny. You say you want to overtake market maker. Yes, so purple is our favorite. Purple is the color that represents W markets. So yes, purple, more purple hats. Purple is the W markets color. Exactly. String official. You say what I can pick from this session is to pay attention to market structure. You should. What no matter what strategy that you are using, it's okay to have to like trade different strategies. In fact, almost every trader trade a different strategy. But then you should have an in-depth understanding of direction. That's market structure. Like that should build um your the foundation for your strategy. Somebody said, don't you endorse breaking even, ma? Of course I do. Of course I do. Break even is one way that you can eliminate risks on a trade. But then breaking even is also something that you don't just do anyhow, right? When you're breaking even, you have to break even when the time is right. Because there are instances whereby you're doing the right thing at the wrong time and then you get hit for it. You can break even at the wrong time and market comes and take you out and still continues in your direction. So because of that, you want to break even when the time is right. One of the contents that I've created, which is coming out very soon, is on break even because somebody have asked me this question and I showed you guys how I break even and the right way that I think, break even should be applied. So be on the lookout for that as well. How to overcome greed. My dear, the only way to overcome anything, whether it's greed or any form of emotional whatever, is asking yourself this question. Since when you don't they do this thing, how have it benefited you? Like just do a deep dive and don't lie to yourself. Since I have been doing this thing, let's say you have been greedy all throughout for a period of time in your trading or whatnot. Since you have been practicing greed religiously, what have the results been so far? If you look at the result and it's a negative result, your normal human sense should tell you that this thing is not benefiting you. So you start looking for ways to change it, to turn things around. So instead of doing what you have been doing before, you want to do something different so that you can get a different result. If you have been overly greedy, you take a trade and then you don't want to take profit and all of that, then start taking profit. Even if you don't want to take full profit, take partials and leave something to run, right? That way, at least you are not leaving the whole money on the table and then maybe market to come and collect everything back. Because at the end of the day, the market is rewarding you not because you own the market or it owes you anything. So whatever it gives you, you take it and you move on. You come back another day because this market is not going anywhere till the end of time. The forex market will always be there. So many more trading opportunities will still present itself. So you should not put all your mind on just that one trade because you want to collect everything that belongs to Caesar inside of it. Okay. Sometimes you can. Yes, I endorse taking what belongs to Caesar, but then when you try to like take with sense. You understand? Even if it's 100, take like 98 or 99 and leave one for Caesar so that there will be something for you to come and take another day. Time frames to enter trades. Time frames to enter trades is relative, right? It's not it's different for everybody. There are people who prefer to take their entries on 30 minutes, 15 minutes. There are people who likes to go down to 5 minutes, 1 minute. So it depends. What the time frame that I take my trades also vary, right? Depending on what I'm looking at. There are times where I take trade entries from 5 minutes. There are times I take entries from 15 minutes. There are times I go all the way to 1 minute. So it's not necessary that the way I do it is the way you do it or everybody else. Um, Forex update. Thank you so much. Thank you. Say you've taught me more than just job skills. You've shown me what strong, empathetic leadership looks like. I'm a better professional, honestly, a better person because of your influence. Thank you. I appreciate that. So, best time frame to place trades. Okay, I've answered this question. How do you set your stop loss, please? Okay, so I set stop losses at points of invalidation. And that is also another thing that so many people, fail to understand. And as a result of it, placing stop losses where you should not be placing stop losses have caused people to take losses from trades that potentially were positive. So you have to know where the point of invalidation is. That is where your stop loss should be, below your point or above your point of invalidation, not in no man's land, because some people go just carry stop loss put for anywhere, just, or maybe there are people who place stop losses based on number of pips. Let's say waiting I want risk for this trade at 10 pips, you know, go past 10 pips. But then the point of invalidation maybe stretches to 20 pips or 15 pips. You understand? But then they have chosen for themselves that they're just taking only 10. And then you put it at 10 pips and price takes you out and still did not invalidate the setup and still went in your way. So you have to place your stop losses at points of invalidation. If you want to learn more about this, it's everything that I've spoken here, everything that I've said here is inside of my mentorship program, which I recently launched, and the link is in my bio. There's discounts ongoing, 50K discounts for early bird and stuff. So everything that I've said here, whether you're a beginner, you want to start from scratch, everything for everybody is there. So how about hedge funds? What do you want to know about hedge funds? I fit use them or do um my entry criteria are basically these four questions that I already mentioned that I answered for you guys. But then at the same time, there are different things that make up entry criteria for me. Sometimes uh, areas of fair value gaps, order blocks, all of these I use them for entries. So but you have to understand how to use them, which ones are valid and which ones are not. Is it possible to flip $2 to $100? I mean, with the grace of God, is there anything that God cannot do? What God cannot do does not exist. Of course, you just need to believe in yourself. You need to believe that you can do it. $2 to $100 is possible, actually. You can start with the least 0.01 lot size. Before you lose $2, you have to be risking 20 pips with a 0.01 lot size. You can take a trade with 5 pip lot size. Sorry, a 5 pip stop loss. And if that trade goes well, you can make money that takes your $2 to $5. Before you know it, your $5 to whatever, whatever. So if you have the skill and you can do it, anything is possible. Anything can be done. People do it. I'm very grateful for this class. It has really gone a long way. God bless you. Thank you so much, Leanne. You're welcome. You're welcome. What time frame is it advisable to enter trades? It depends on you. It depends on the trader. There are different people, different choices, different. In fact, the setup itself sometimes determines which time frame you should be taking entries on. So yeah. Also, it depends on the kind of trading you do. If it's somebody that do position trading, or what is it called, um, swing trading, you can take entries from even 1 hour time frame, and stuff like that. So it also depends. But if you're doing scalping, then you definitely know that your time frame is supposed to be the lower time frames, 1 minute, 5 minutes. My question is, don't you endorse making use of breaking even to secure profits? I do. I've answered that question, and I will still answer it in my upcoming content where I talked about breaking even and all of that. Okay, somebody said Forex updates. I wanted to take the time to express something that often goes unsaid in the rush of daily work. You are an exceptional leader, and I feel incredibly lucky to work under your guidance. Thank you so much. I appreciate you. WMarkets to the world, yes. So, how can I know zone or level that will hold? My dear, you don't know whether they are going to hold until price does something to tell you that they are going to hold. So, price always makes the final call. They always make the final call. You can have your expectations of it, but then what price does inside of your zone, which we sometimes refer to as points of interest, is what is going to determine whether that zone is going to hold or it is not going to hold. So, just like I explained with the Euro USD, where I answered the third question saying, what is price doing there? So, what is price doing inside of your point of interest is what is going to determine if it is going to hold or if they are not willing to work with it. So, you always have to pay attention to those tiny details, and that is why you have to have a deep understanding of market structure, because when price comes into your point of interest, you want to look out for a bullish or a bearish QM, that is a break of structure inside of that place, to determine whether it's going to hold. You could see that at the time of price coming into as of time of price coming into this point of interest, I'm looking at what is price doing there, what is price doing there, to tell me whether this place is going to hold and we're going to buy from there, or this place is, or they are still going to continue bearish. And at the time, they showed me that they wanted to change to the bullish, side of things, and that was why I was buying. And then at the time of price reaching here into that daily bearish high that could have had the potential to sponsor a bearish continuation. The same question, what is price doing there? Because that place was also a point of interest. And at the time, I know that if they wanted to continue selling, they will have to trade lower and take this low. But if they don't want to do that, they will react to it and go up. So you see that they did not take it, they reacted and went up. So these are two scenarios whereby price basically told you clearly that they want to work with this place and they do not want to work with this place. So you just have to have an in-depth understanding of, direction so that you will know when price is telling you what and be able to read it. So please, can you help with this? After the break, why did the market come down to discount before pushing up? You cannot always determine how price does its thing. That's why the market is not your personal business. The market is going to behave however it wants. It is only up to you as a trader to follow. You understand? The market will always take the lead. It's only up to you to follow. I cannot say the reason why they did not do that discount delivery before continuing. But you see that even though they didn't do it and it took them months and months and months, they still came back and did it when they felt like doing it. So our timing and the market's timing is not the same. They do what they want to do when they want to do it. And if they don't want to do it, they don't do it. You cannot even, there's nothing you will do that will convince them to do what they don't want to do. So that's why your job as a trader is to react and not to predict. So you're supposed to be a follower, not taking the lead, so that you not go and get yourself in trouble. So market structure and SMC they print money on God. Now juju cause please, is the MT5 is coming up next week? Yeah, definitely MT5 is coming very soon. So for all of you that have signed up and you are yet to create accounts and start trading with Star Trader, the MT5 platform, I know that is what is holding back a lot of people because you prefer to, most of us are used to using the MetaTrader 5. So rest assured it is coming next week and you can create your accounts, make your deposit and trade with the broker using the MetaTrader 5. And remember that you also get 50% deposit discount when you sign up with my link. So deposit discount, what it means is basically an additional money on top of the money that you're depositing. You cannot withdraw it. You cannot withdraw it. It's not withdrawable, but it's going to help you it's going to help in many ways. It will increase your trading account, your trading balance. Let's say you deposit $1,000, you can get an extra $500 deposit bonus. What that helps you with is increasing your capital so that you can trade much bigger lot size if you want to. And also it can help you to hold trades longer, assuming that you find yourself taking a trade that puts you in massive drawdown. Because of that additional money that is augmenting your account, it can help you to hold through, and open more positions. So it's beneficial. It helps you to make more money and all of that, but you cannot withdraw it. Uh Somebody say forex update, your data go soon finish. Please, I beg. How can I know zone or level that we hold? I've answered that question. Please, Ma, would this video be saved here for reference? Yes, I think it will be saved, but you'll have to confirm from our host on how to gain access to it. How can I know a zone or level? Oh, I've answered this question so many times. You asked the question repeatedly. Do you have any in-depth video on market structure? Yes, I do. I have in-depth videos in all of the concepts that I trade: market structure, liquidity, order block, fair value gaps, demand and supply. All of these things, they are all in my mentorship program. The link is in my bio, like I said before. So yeah, you can gain access to them there. Understanding retail makes your explanation on smart money concepts so clear. Oh my God, you just changed my view of the market and answered so many questions I have had for a long time. Thank you. Yeah, so that forex no hard though. Forex no suppose hard. It's not that hard. We just complicate things for ourselves. It's very often. If you do it the right way, if you follow things the right order, all of these things will make sense eventually. And I'm sure none of us here is daft. Everybody here have brains that work. You just have to do the things, do it the right way. So, okay, I'm seeing so many repeated questions here, and I've answered most of them. So, yeah, I'll be handing over to the host to wrap up so that we can all go and do other things because this is almost 2 hours into the session. I know that this session was really
Yeah.
enjoyable, and if they leave us now, we'll just they talk, they go. But let's wrap it up so that we can do other things. So I really appreciate you guys showing up. Thank you for all the lovely comments. I see all of them. I see everyone, even the ones I was able to read and the ones I was not able to read. I see all of them and I appreciate you all for coming. And for the purple hats, yeah, Thank you, guys. Thank you. All right. So handing over to you, host.
Thank you so much. So we have to end this webinar, and the best way to end it is to announce our winners for the $50, our three lucky winners. So I'm going to leave that up to you, Trader Nancy. So can you select the three lucky people to win $50? At least they can use that to go home.
Oh my God. Jesus, how this is a very tough thing. Can you please do it instead? This is a very tough job.
Oh, if I do it, it might
Everybody
seem
here,
unfair.
everybody
They
here
might seem
is a winner. Like everybody here is worth it. So I really don't know who to choose over who.
the thing is that I won't be able to do it because of it might seem like I'm being partial since like I'm representing W Markets. I think you'll be in the best place to actually like just pick anyone.
Oh my God. Okay. Wow. So how do I do this? How do I do this? Okay, let's look at the comments and those that have been really active and all that. But then the comments choke like,
Okay, can
yo,
you ask, maybe you can ask like questions, and the first person to like get the question, like answers the question, like
okay.
will win or something. Yeah.
All right. So let's do it like a trivia.
Yeah.
Let's do it like a trivia. I'll ask, forex questions. I'll ask forex related questions. Oh my God. All right. So three people, right?
Yeah.
Yes, so now by first, not just first to comment the right answer. You can be first to comment, but if your answer is not right, then you will not be the winner. Yeah, so give me a minute. Let me find some questions. Let me find some
Okay.
questions.
So while we're waiting, I just want to remind everyone that that W Market is going to have MT5 very soon next week. So all of you that have not signed up yet should please do so. And also you'll be enjoying 50% deposit bonus if you are using Trader Nancy's affiliate link. So please hurry up and do that as soon as possible. And yeah, well, let me also entertain you since you're doing most of the talking. If you really, really enjoy this space, you have to go to Ascend Trading School on Telegram. I'm saying this because there was someone that was asking for Trader Nancy's Telegram channel. So it is Ascend Trading School. And yeah, I think that's all from my end. So let's wait for Trader
All
Nancy
right.
to come up with her questions.
Okay, so I'm going to consider all levels. Yeah. One of the
Yeah.
questions is going to be beginner friendly. So even if you are in your beginner stage, you should know the answer to this. And then one of the questions is going to be an intermediate question, and one is going to be an advanced question. So all levels considered. So the first question is, let me make sure that, okay, yeah, cool. So the first question is, what is the, don't use Google. Oh. If you use Google, no, sure, because you take time. So the first question is, what is the full meaning of PEEP? What is the full meaning of PEEP? When I don't they use Google, I never see any response. Somebody that knows it should have been able to type it and drop by now. Ah,
Okay. I think OG Barnaboy was the first person to actually comment.
what was his comment?
He said price in percentage. Is that correct?
Nope. I'm seeing Moses. Moses. Oh, come on. It will be bad. It will be hard to follow. Jesus, comments are dropping like water.
He's going to be the
But
first
I
to
already
comment.
see. I already see the answer. The correct answer is price in point, and point in price rather.
Point in price. So I think the first person was actually, oh God, let me check to be very, very sure. You said price in
Point in price.
point in
Point in
price.
price.
Okay, then
Yeah.
congratulations, Spectrum Globe. He was the first person actually. So congratulations,
Woo!
Spectrum Globe. Please send a DM to any of our social media platforms with a screenshot that you are actually Spectrum Globe. Please. Congratulations. Okay, then for our next question then.
All right. So the next question, which currency, which currency or currency pair, which currency pair is referred to as Kiwi?
So sad I can't answer. Okay. Okay.
So the
So
correct
what's
answer is NZD-USD. Who is the first person that answered it?
S X A? Sorry,
NZD,
what's the correct
NZD,
answer?
New Zealand dollar slash US dollar.
Okay, okay. So the first,
NZD-USD.
okay, NZD. So let me check. NZD USD. That's Imen
Imen.
Imen.
Imen,
Imen
Imen.
Imen. So congratulations,
Congratulations,
Imen
Imen.
Imen. Ensure to send a DM to any of our
Congratulations.
social media platforms with a screenshot to prove that you're actually Imen Imen. Congratulations. You won $50. So now we're getting to the final question. The
All
final
right. So
question.
the final question. Um, this is supposed to be advanced, so it's supposed to be hard. You're supposed to
Okay.
think. So the final question: the money that how do I make this really hard? I need to twist it. The money that you put down with your broker in order to take a trade, right? What is it called?
Okay.
Let me use an illustration, right? Let's say you want to buy
Okay.
a car, yeah, and then you go to the dealership, and the dealer tells you that you can pay, let's say 40%, and then they will cover the remaining 60% or whatnot. That 40% you put down is your down payment, and then you can carry the car and go and be riding. So in this instance, we're taking it to the forex, yeah. So the money that
Yeah.
is like your down payment, in order for you to be able to take a trade or open a trade, what is it called? The right answer is margin. So who was first person to say margin?
Okay. Someone wrote free margin. I don't know if that
No,
works.
it's not free margin. It's margin.
Okay.
The first person to say margin, that's Moses, right? Moses
It can't be
Tala.
Moses Tala. Hope it's not the person that got okay. I can't see a Moses Tala.
Right, I think right after they
Okay,
answer the
okay,
question about,
Pitala, right? Okay, yeah. I've seen the person.
yeah,
Congratulations, Moses. Congratulations. Congratulations. Please make sure to send a DM to any of our social media platforms with a screenshot that you actually got it. So yeah, I think that is a good way to end our trader spotlight, our main trader spotlight with the amazing trader Nancy. Thank you so much. I had an amazing time from the Twitter space to the Instagram live, and I really learned a lot. So thank you so much. And again, for you all that want more of Trader Nancy, don't forget to go to Ascend Trading School on Telegram, and don't forget to use the IB link to get 50% free deposit bonus on any deposit on your first deposit at WMarkets. And stay tuned for MT5. You see, WMarket has your back. We just have different updates. So yeah, thank you guys so much. I really enjoyed this webinar and I learned a lot, and I hope you guys learned too. Enjoy the rest of your weekend and goodbye.
thank
Goodbye.
you.
Yeah, thank
Thank you
you.
all.
Bye.
Bye.
Bye.